Apple made about $391 billion in 2024 financial year, but here's what most people actually miss. When we compare these numbers to that of the previous period, we can see that revenue went up, but profit went down. So how do you tell whether Apple actually performed well? In today's video, I'll break down Apple's 2024 financial statements and show you how to analyze a company like a pro. Welcome to TSC's Finance Nuggets, where we break down money, business, and strategy in simpler terms. Today, we're going to be looking at Apple's real numbers to understand how company analysis actually work. Let's dive in. First, let's look at revenue. The revenue for the 2024 financial year ended at 391 billion compared to 383 billion in 2023. This shows us that revenue went up about 2% when we compare it to the previous period. It shows us that the business is still growing and demand is still strong. But it also confirms that Apple is a mature business because the growth is slow at around only 2%. If we're comparing it to that of high growth companies, we can see that when comparing the performance of high growth companies in between periods, they usually average about 10 to 20% growth. So we can see that Apple is a mature company and not a high growth company. Next, let's look at profitability. Apple's net profit in 2024 was about $94 billion, and when we compare it to 2023, which ended at about $97 billion, we can see that profit declined at about 3.4%. So even though revenue increased by 2%, profit declined by about 3.4%. This just shows us that higher revenue does not translate into higher profit. And the reason for the decline in profit, even though there was a higher revenue, it could be related to higher costs or maybe higher margin pressures. In the case of Apple, when we look at the face of the financial statement, we can see that the income in provision for income taxes actually increased, and this negatively impacted the net profit. Now let's look at the cash flow. Apple generated about $110 billion in operating cash flow in 2024. This shows us that the core operation is still strong, the core business is still going very strong. The company can still decide to use cash for other investing activities such as equipment, technology, or other long-term investments. So you don't just stop at the operating cash flow. You still look at how much is still being reinvested in the company. So it's not just about how much cash a company generates, it's about how much cash it keeps and how much it has left even after reinvestment. Then let's look at the financial strength of the company. To understand the financial strength of a company, you don't just look at how much cash it generates in that period, you also analyze how much cash it holds at the end of that period. In the case of Apple, we can see that it doesn't just generate cash, it also holds a large amount of cash, cash equivalents, and marketable security. And this just shows us that Apple has financial flexibility, it has financial cushion. It can decide to buy back shares, reinvest in the company, or pay dividends to its investors. So what's the case of Apple? We can see that it's a very strong business, it's a solid business. Even though growth is slow and profit is down, it's still generating huge amount of cash and maintaining financial flexibility. That's why looking at one number might not be enough. You have to look at the whole financial statement to get the general picture. So basically, here's a framework to actually analyze the financials of a company. You look at revenue, is it increasing or decreasing? Is the profit increasing or decreasing? What story does this number tell when you look at all of them together? That's how investors think. So thank you for watching today's video. If you found it useful, give it a thumbs up and also follow at Finance Nuggets. Goodbye.